Government is managing the country's public debt to stable. That's from an outlook of negative at its last reading of the country's debt situation. At the same time, it affirmed its actual rating of the country's credit. Moody says that it sees an improved fiscal outlook, which signals the government being in a position to stabilize the country's debt burden over the medium term. Nompumelelo Siziba filed the following report for us.
Moody says South Africa's fiscal position has markedly improved from the period of the adverse impacts of the coronavirus pandemic. That's thanks to government pushing to cut expenditure, as well as a robust tax take, largely from the mining sector, that's benefited from significant global demand. The changing of the credit outlook to stable, as opposed to negative before, is a positive move for the country.
It's definitely a welcome move coming through from Moody's to upgrade South Africa's ratings to positive, to stable from negative rather. I think the interventions that the government has been doing, the fiscal consolidation that continues, and the decisions that have been made recently during the budget by Minister Kotengwane, which show a continuation of the promises that the government, and particularly the National Treasury and the Department of Finance, made to the world, to say they're going to make sure that they consolidate the fiscus and they're going to continue to control unnecessary budget expenditure, and they'll do their best given this difficult environment that we're in to make sure that they move the needle in the right direction. The biggest challenges obviously that will impede us getting further ratings in the right direction include unemployment, which continues to be a very big pain on our backs. It includes the slow growth in the economy, but that one is obviously dependent on what happens throughout the rest of the world in terms of the economic recovery.
While the mining commodity sector helped to spur revenue growth, as announced by SARS yesterday, efficiencies at the institution of SARS itself were also cited by Moody's as enabling a greater degree of fiscal flexibility to deal with increasing social demands on the back of higher unemployment and higher inflation.
It's also the improvements in terms of efficiencies that are done by SARS, which you remember in the years gone by, it struggled quite a bit, even to reach the targets. This time around, because of the improvements that we had done, digitizing a lot of the tax revenue collections, or the tracing and tracking of people that are not paying tax, that has resulted in better tax revenue collections. And as of yesterday, they did tell us that they collected 16.5 billion more than what was announced in the budget just a month ago.
Moody said the country rating remained unchanged at BA2 due to a mixture of positive and negative factors. Positive factors included the country's sound financial sector and significant investment in the country's capital markets by foreign investors, while the negatives continue to include state-owned enterprises which continue to demand support from government, as well as what they termed the structurally low growth and labour market rigidities that maintain the status quo of high unemployment, inequality and poverty. Nompumelelo Siziba, SABC News, Johannesburg.
Residents of Maiden Farm